Guys, while I've been mainly analyzing cryptocurrencies such as Bitcoin, Ethereum, and the various altcoins, I haven't really been touching as much on some of the other companies and tickers that are involved in the crypto and blockchain space. So this video is covering Marathon Digital Holdings and Riot Blockchain, both of which are involved with cryptocurrency mining, as well as other activities in the cryptocurrency space and blockchain. The reason why these catch my attention is because they've actually been following Bitcoin's chart very well. And in addition, you could argue that they have much cleaner Elliott Wave patterns on the whole. They very clearly correlate with both the stock market as well as the cryptocurrency market. And believe it or not, aside from the incredible and lucrative opportunity for a rally to take us to our eventual market top, they also are giving us some clues as to what the timing may look like. So that's what we're going to cover here today. So we're going to start, of course, with the big picture chart. We've had a big rally since our everything crash of March 2020. That is when cryptos crashed. That's when the stock market crashed. That's when oil crashed, even bonds crashed. Pretty much everything crashed except for probably the US dollar, thanks to the liquidity crisis or whatever theory you want to believe. But ever since then, we went absolutely parabolic for Marathon specifically. And I'm going to call this MARA more or less just because that's the name of the ticker for shorthand. But we had a, let's see, 1,400% gain in Marathon from our 2020 bottom just for our first wave alone. When we look at Riot, the action is somewhat similar. Let me measure that as well, just to give you guys a good idea of where we went. That was about almost an 800% gain. So the rally potential is spectacular because ever since we had our 1-2, we went nuts. Now I'm going to be mainly focusing on MARA because it has a more standard looking and cleaner pattern. But again, this shape resembles that of Bitcoin very closely, as does Riot. So again, we had our March 2020 crash. We had a first wave top in August of 2020. So when we look at our Bitcoin chart, you'll see that it also follows the same pattern. We had a nice top in August of 2020. Eventually, our top was April for Bitcoin. I know Ethereum and most of the altcoins, they had a slightly later top in May. But when we look at our blockchain, Bitcoin mining companies here, we had the same kind of action. We had a top right around that spring time frame in April 2021. April for MARA, Marathon Digital Holdings, and for Riot Blockchain. So a little bit earlier, it came in February of 2021. So very interesting. Ever since then, we've had a really long grinding pullback in both of these, which, well, very closely resembles what we've seen in the cryptocurrency space, in which, again, we had an A wave, big B wave, expanded flat correction, and a C wave to finish things off. Whether or not we are done, we need to turn back up and rally impulsively, but we have certainly pulled back deeply enough for this to be a legitimate fourth wave. Definitely say it broke a little bit lower than the ideal support at 0.764, but we have done nothing to invalidate this entire impulse. Again, you have a 1, 2, 3, and expanded flat fourth wave. Until your fourth wave overlaps the top of the first wave, it is valid. So right now, this is a textbook rally impulsive structure, Elliott Wave impulsive structure, with one more wave to come. That would be the fifth wave. There is an alternate view here, at least on Marathon, that our secondary high here is actually the top of our 5 waves up, and that this is a second wave pullback. That's what the blue nomenclature is showing. That is my secondary pattern. My primary is definitely purple. We don't have the same kind of thing in Riot Blockchain because we didn't have a higher high, so you can't really argue that this is a truncated top, especially when you look at the shape of this. It looks classically B wave, just a big zigzag thing. It's really ugly, which is about what you'd expect to see in this situation. We had similar things happen in Bitcoin, in which we had a higher high, and you could actually count that as an impulse, 1, 2, 3, 4, 5, but it fits better as a B wave, and we've had a lower low since. So is this a second wave down, or is the C wave in a bigger fourth wave? I'm going with a more conservative option that this is actually a large fourth wave correction, which means we have one more rally to go. Now, if it does end up being that there's a second wave and we have much higher to go, we'll find that out later. But up until that point, there's not going to be much of a distinction between the two. So before we go on to what our rally targets look like, are we done yet? That's the number one question. When you look at our MACD, definitely have a divergence. This looks a lot like what we see in the cryptocurrencies, Bitcoin, all that. You were very stretched back here. Actually, we're even more stretched, arguably, back in the original crash, May 2021, as compared to where we are now. But we definitely have a divergence for at least a local bottom. Maybe we have a slightly lower low. It's yet to be seen. When we look at Riot Blockchain, Same kind of thing, a nice divergence setting up in which you're getting less and less stretched down as we have ground down over time gradually. So when we look at our closer chart, this is the 5-minute chart for Marathon Digital Holdings. It has started to gain some momentum back off the bottom. I know I've been calling for at least the bottom being over or close to over in the various cryptocurrencies. And I know it's getting frustrating for a lot of us. We're not seeing any bullish action while the stock market's been running away. We've just been kind of stuck in a holding pattern across most of the crypto space, but that is not the case in Riot and Marathon. These are equities, so they don't perfectly follow cryptos. There is a general correlation, but this could be convincingly 5 up right here. And you have I'm actually going to zoom up even more. Hopefully we can get some view of the microstructure. So you could call that a 1, 2, maybe a 3, 4, 5. That more or less fits what we would expect to see when we look at Riot. It's very much the same kind of thing. I'd say this is arguably even cleaner. And well, our MACD also reflects that. A 1, 2, maybe the top of third, fourth, 5-wave rally, something like that. So that is convincing enough for me so far. However, if you are trying to go long and you want more a higher confidence setup, might want to see this thing pull back and have a bigger impulsive rally. So we're going to have more updates on that as we go, but let's see if this thing really turns as we'd like to see. Now, where is the excitement? Well, this is Riot. I'm actually going to, we'll go over Riot first here. So again, if this is a 3rd wave and we're finishing a 4th wave, when we look at our Fibonacci extensions built off of this 1, 2 here, our 3rd wave shouldn't go any higher than the 1.618 extension. And that is exactly where it hit on the dot, 79.15. We pulled back and we shouldn't have broken 2079. We definitely broke well below the standard target. However, in Elliott Wave theory, we have the law of alternation. We've seen this exact same action in the stock market indices, the Dow, the S&P, the Russell, in which when you have a shallow 2nd wave, you often make up for it with a really deep 4th wave. Your more standard pattern is where you have a deeper 2nd wave and a shallower 4th wave. That's actually what we've seen in Marathon, in which we had a much more standard looking 2nd wave, and we haven't retraced as deeply for a 4th wave, although one can argue it's still deeper than you would expect. So going back to Riot, we haven't broken the pattern. This is still textbook impulsive looking, and unless we break more support. So if we have a really crazy pullback, then we may have to change our perspective. But 4th wave down, therefore, since we hit the 1.618, our standard 5th wave high target is about 180. That's right, 180. So I have a box drawn out here. You will typically get between the 1.764 and the 2.0 extensions. Since our 3rd wave was so over, since it got to the 1.618, the 2.0 is our standard target. And we have the other equivalents we use in Elliott Wave theory, in which you can take your 3 and your 4 and you build a Fibonacci extension off of that. And typically your 5th wave will get somewhere between your 0.382 and your 0.61 extension. So when you look at that 0.61 extension, it goes right through our purple box. So therefore, we have a very high confidence target between 108 and 180 for an ultimate top. How much is that? Well, I could actually give you an estimate of how much upside potential there is there. If we take this into the middle of this box, about 133, that's right. That is a more than an 18x return. That's right, 18x non-leveraged. This isn't an options play. You're not using any kind of leverage. This is just holding the stock all the way to the top. So maybe a great buying opportunity. Before I delve into that, I'm also going to look at Marathon Digital to show you guys what we have there. But this is looking pretty good. What kind of a rally would we expect? Well, we expect some symmetry, and our standard 1st wave target, again, we expect a complete 5-wave impulse to finish this. Our 1st wave should get to about where our bounce here was on March 29th. So expect somewhere in the low $20 range. If we get a full 5-wave impulse into there and we pull back, that will be one heck of a rocket launch. Let's say we pull back to about $10 or so. If we rally from there to our standard 3rd wave top, that could be an 8 to 9x return just from that. So that could be a good entry if you're looking for a safer place to buy. And if you've been holding, well, no reason to sell just yet, because there could be a lot of upside left. Now, before I go into any more detail, I'm going to go over Marathon, which also has its own interesting characteristics, but this has had a more standard looking pattern overall. The expanded flat 4th wave is actually very common in Elliott Wave theory. So this looks a lot more textbook. So you got your 1 deep 2nd wave, 3rd wave hit just about actually almost on the dot, the 1.32 extension. So that's the lower extension you typically hit for a 3rd wave. We should have held 1134. We broke a little below that, but we didn't get down below the next fib. So therefore, Our target aims around the 1.764 extension, which is $164. That's the bottom of this purple box. Why does the purple box go higher? Because again, we could hit the 2.0 extension. And when we take our big 3-4 equivalents here, third wave top to the bottom of our fourth wave so far, our upper targets are somewhere between $58 to $193. That $193 mark goes right through that purple box. So exciting thing here. And here too, we have some targets overhead. So our first wave would get to about where our March 29th top is. Again, this is an estimate. So that could take us to $32. That would be a 3x return from where we are right now, possibly over the next few months. Because if this thing needs to get going, it needs to get going pretty fast. This was about, let's see, 2 months ago. So within 2 months, we could have a 3x return on that stock before we have a pullback. And then when we look at our upside potential on this one, if we go from the bottom of the second wave to our box, that would be almost a 10x return from where we are at the moment. 19x return. So that is pretty spectacular. But here is where Marathon gets interesting. So we talk about how in Elliott Wave theory, it's all about price levels, retracements, supports, resistances overhead. Timing is secondary. However, in certain structures such as diagonals or even with corrective waves, things like that, sometimes you can project a time very approximately. And there's another textbook Elliott Wave, I guess a pattern or a heuristic algorithm. I don't know what you would call it, but you can draw a trend line through the bottom of your second wave to the bottom of your fourth wave. And if you translate that up, oftentimes it will be, it'll be collinear with wherever our fifth wave top will be. In this case, I put it through the top of the first wave. So if we do that, again, we got our trend line through the second and fourth wave bottoms, slide that up, translate it through the first wave top. That gives us, when we triangulate it to the bottom of the box, that gives a target of around October 2023. That's right. We actually have somewhat of a timing estimate. It's not perfect. We're going to have more of an idea of where this could go, especially if we get a second wave here and a fourth wave here on the smaller degree. That would give us a much more clean target. If this ends up being an ending diagonal structure, that would also give us a more accurate target of where we could go. But right now, this is giving us a pretty clear target range. Again, specifically Marathon. Riot, you can't do this with because it was very non-standard looking, but I've seen this time estimate on various other asset classes. I believe I did a chart on the Dow as well. And I guess the second half of 2023, there's a lot of confluence time-wise. A lot of Fibonacci levels seem to intersect their trend lines there. So again, this is not set in stone. Very, very loose approximation. We need to see some bullish action before we can even think about that. But that gives you an idea of the kind of return you could see over the amount of time. So that is where that's the return potential. As for the other excitement, if you are into leveraged trades, I know I am, so you can probably see I have some option chains written here. This is all out of date now from a few weeks ago. Those are just option strikes that have good liquidity. I have the same thing in my Riot chart. But the point is, with that kind of return, just from unleveraged, there is going to be some lucrative potential on the, at least with call options. So again, don't get too over allocate just yet. I do have some Marathon call options at the moment, pretty conservative. I got $40 for September of 2016, September 16th. And again, expecting us to get to $32 well before the end of the summer. So that could be good. I'll be adjusting as I go up. But the big play, again, would be waiting for the big 5-wave impulse, waiting for the second wave pullback, and then possibly catching this third wave. So again, that could be a, what is that, about 460% return. And if you've looked at the option chain, what is the top of that? It's about $110. I don't even know if there are options that far out. So it could be absolutely spectacular. I'm not even going to try to calculate the potential return, but things could get pretty exciting. I'm definitely going to be keeping an eye on this. Could be a pretty incredible trade. Subscribe so that you don't miss my updates over time. I'm probably not going to be updating this particular asset as frequently just yet, but as we get closer, there'll be more information on where to get in, where to get out, how to enter the leverage trades. But as of now, unless you really know what you're doing, don't do any leverage trades. If you buy options, buy them far enough out. Don't over allocate. And if you're looking to just buy the stock to hold, whether it's MARA or Riot, pretty good time to pick up a tranche or so. If you've been holding, no reason to sell just yet. So until next time, thank you for watching and happy Memorial Day.